All right, guys, good morning to you for everybody. Today is the 25th of November, 2025. CRAZII Global Market Talk with KEL. CRAZII, anytime, anywhere. Now, seriously, things are really expanding for me in Vietnam. We are moving to a lot of provinces, and we also have different countries, agents coming forward to use CRAZII. We should have the CRAZII app ready by the end of this weekend. We are really finger crossed. If all goes well, we are talking about at least probably 1,500 people using CRAZII at the same time, something like that. And I think that the impact to the market, the demand supply will definitely be another top in the market too. So of course, end of the day, my position is very simple. I just want everybody here to make money from the market. All right. Now, for my friends in Singapore, I know that it's been 2 months I last seen you. I know that you guys miss me, and I'm coming back soon. All right. Just give me some more time. I'm about there. Okay. Now, thank you again once everybody for coming online. Now, today there's a few important market news that I want to share with you, and I think that you should really pay serious attention to it. Okay, so give me a while. Let me just take a quick picture of myself for marketing purposes, and we can start moving. Okay. All right. So before that, disclaimer apply as usual. Please make sure that you do your risk management. Okay. Now, what is going to happen in the market? We go to the financial market first to see what's the news at the moment. Okay, let's bring it down. Okay. Okay, let's talk about the market last night. Now, last night, S&P 500 rips 1.6%. Nasdaq basically has the best day since May as Alphabet reignite the AI trade. So what we have is that we know that few days ago, Nasdaq came down crashing. Everybody was sounding the panic button. Then after that, the next 2 days, the market just recovered to where it came from. Now, this is very typical, clear point where the boys have to sell while another group of boys have come to buy. So why would the boys want to sell and then buy back later? Now, I will give you my answer in a short while time. Okay. But let's look at what they say, yeah? So because it's Thanksgiving, everybody feel that it's time to buy something. So that's why the markets feel like the AI is still the best bet. So interestingly, the S&P 500 and the Nasdaq went up by 1.5% and 2.69% respectively. But interestingly, the Dow Jones only up by 0.44%, which is like probably 1/5 of the entire Nasdaq upside. Very interesting. So what is the one that pushing the market is the shares of Alphabet, who basically saw gains all the way up. The Alphabet and Google, same thing, yeah. Okay. So Google basically upgraded its AI model, Gemini 3, and then that is basically pushing the stocks up higher. And of course, that basically propel all the rest like Broadcom, Micron Technology, Palantir, AMD, and Meta, Nvidia, Amazon, all recovered. Okay. So basically, in short, one buy, all buy. So it's like more like an organized buying. But that was the same thing that they did 2 few days ago. They organized selling. So this is something that I want to talk to you about later on. Yeah. Okay. So of course we all know that this the president of the New York Federal Reserve, he said that the door for December rate cut is still there. So that's why again everybody buys on the AI drive up. All right. So interestingly itself, we all know that we do have some data coming in, and it does show to be a bit of stagflation environment. Yeah. Okay. So do take note, Thursday is closed for Thanksgiving, and it was shut down. Oops, sorry, someone draw on my screen. Okay, just remove it away. Yeah, hold on. Okay. Okay. So there will be closed. It'll be closed for Thanksgiving. Okay, and then shut early for Friday. So in short, it's a short week for this week itself. Okay. All right, that is for the financial reports and markets. So let's look at the interesting news over here. So apparently the S&P dividend is now at the lowest level since the dot-com bubble. That means that we're talking about the S&P 500 companies, right? They are not giving as much dividend. In fact, the lowest since the dot-com bubble exploded. So this is actually a very, very bad sign, if you ask me. I mean, the companies are not doing well. That's why they're not able to give the dividend. But if they cannot give dividend, then why the stock market is still high? It's because everybody's buying on the stock price. So what we have is that with earnings from the Magnificent Seven, they are the one making the whole chunk of money, and they are the one who probably are giving some dividend here and there a little bit. But because the stock price is going up, right, everybody don't really bother about dividend. Everybody just bother the stock price. And because of that right now, right, everybody is running into this so-called AI bubble, yeah? Now, is it a bubble yet? Well, I don't think it's a bubble yet because you don't have everybody going crazy about it, but we are almost there. We are definitely almost there. Right, a lot of Black Friday advertisement, yeah? So European market actually closed higher on US rate cut optimism, and of course shares went up higher. Okay, so these are the typical news that you see for the official side. Let me go into something that is non-official, yeah? And that is one of my concern right now. Okay, let me just bring it to you. Just give me a while. I go to my own x.com. Okay. Okay, so first of all, right, one thing that I'm very uncomfortable is this one. The US banks are now holding $395 billion of losses unrealized in the security purchase when the interest rate were near zero. I mean, in short, right now, right, because when they basically bought the bond market, the interest rate was at almost zero. That means the bond price is at a high price. Now, they don't want to speak directly, let's go in rounds. So, which means that the bank now is holding a lot of losses, okay? But because they don't count in the books, so the bank don't need to show in the books because of some creative accounting by the Federal Reserve. So this article, I think, is a very, very good read, yeah? So the question will come is, right, if the rate comes down, which is secured, I mean, if the bond comes down, then of course, I mean, the bonds goes up, right? They may recover. But the question is this, right? The losses is still there. What if they stay there for a time? So that is where right now you notice this, look at the amount of money that they are holding on losses. And that's why the Federal Reserve is trying to find a way to settle this problem. And if this one turns into real losses, this is going to be catastrophic. So of course, at the moment now, it's still okay. Everybody just know there's losses, but let's keep quiet first and hope for the best. Now, why am I saying that I'm very uncomfortable with the market? It's because the market breadth right now is historically low. So only 158 companies out of 500 are outperforming the index year to date, the third lowest reading since 1960. That means that the 500 S&P shares that's inside the S&P, all right, up to only 158 stocks are now better than the S&P that's performing, while the remaining 342 are actually trading, all right, below the S&P. So, which means that right now, right, this is the time whereby you can see the performance are really, really bad. So why is this happening? As I said again and again, is because all the funds has all entered the Magnificent Seven. All the funds are now holding up the Magnificent Seven. Okay, as long as they are still picking around, it's fine. By one day, someone or some of them have came out some earnings that is not equivalent to whatever they really have and what some of them are calling, this will become a really disastrous impact. All right, you will see a domino sell-off because everybody will just stampede on one another. So of course, again, I hope that this won't happen, but the market breadth do tell you the significance of the market itself are not doing well per se, yeah? And of course, this is one very, very dangerous thing. You can see that the traders are buying on dip on leverage, which means that people are buying a lot of stocks on leverage. And the last time we see something like this is when the market has came down quite a fair bit. So when the market comes down quite a fair bit, then you see the leveraging. Okay, let me just change my color. One here. is that when the market is cascading downwards, right, then people will use a lot of money and buy stocks. And of course, when that happens, the market will go down even more because it means that a lot of leverage. So people buy, sell, cut losses, blah, blah, blah. This one will always happen. Meanwhile, while we're talking now, gold is trading higher, everybody. Gold is trading higher as we are speaking right now. Okay, so it's above OP again. To this point, the gold has been quite daunting. Yeah, I mean, up, down, it's like going everywhere. Yeah. Okay, just take note of that. Okay, let me just. And whenever there's movement in the market, I get a lot of messages from everybody. Okay. Okay, so you can see on the screen, apology for the delay just now. Oops. Okay, so you can see that. So the last time we saw something like this where the thing go crazy high, sorry, here, is that when the market basically collapsed and a lot of people went in to buy, right? So it's like a very good telltale sign to tell you that if people are buying shares when the market is coming down, okay, fine, at least you are buying in the right time. But what if the thing is this? What if the market is buying with a lot of leveraging while the market is still at the high? Well, this is going to be a problem. That means that a lot of people now are taking money on leverage to buy stocks at a very high price, not when it's coming down. So you can imagine if, let's say, a lot of people are buying shares, okay, so many people buy, right? So it's high leveraging buying, okay, that is okay. Then the question that I want to ask is that then who the hell is selling? Who are the people selling to these buyers at the high leverage? We're talking about people taking money, let's say $100,000 of loan or credits, and they go to high leverage like to get 10 times, 20 times, and they take all this money and then they go all into the market at a high price. Can you understand my point right now? So we are talking about individuals jumping in the market with the highest leverage at a high price. So you can imagine what will happen if the market fall by 10%. If the market do drop by 10%, you cannot imagine how bad it will be for those people holding the shares. So that is the reason why I want to share this with you. Now, I'm not calling for a market sell-off. I don't think it's going to be one, but I believe that a 5 to 10% pullback is a basic bet. All right. So let's see whether whether we right or wrong, but just simply follow the OP rule, you should be fine. And of course, you can see that since the Liberation Day, the S&P 500 has been losing some money in the market. And of course, with a lot of money, a lot of banks now putting a lot of cash into the market, that's why the market can't crash. So all these data, information, you can go to CRAZII.com under x.com to go and take a read. Okay, I'll be pumping up more new stuff later today. Okay. All right, so with this information, I am going to share with you this one is this is the 10-year yield, and the 10-year yield shows very clearly that the market is really pricing in a rate cut, pricing in, yeah. So if you look at the chart right now, guys, I can safely tell you that if you look at this point, every time when the market is at the low end of the stick, all right, the market always rebound, right? Okay, this one is quite simple. But do you notice something very important this time around? This time around, right, it's not like the past whereby you can see that the yield coming down, yeah? This time around, the yield is this way, okay, on the same common ground. So which means that if there is a change of position whereby there's no longer any rate cut in December for whatever reason, if Jerome Powell say, no, I don't want a rate cut, well, that will be a big issue because everybody now is pricing in a rate cut. Okay, they're pricing in. So imagine if they start to change the thought again, say, no, we don't have any rate cut. Oh, market will really go crazy. All right, so that's why I said be careful, because now from the indicator of the Williams indicator, we are near the bottom. But what I saw was that the 10-year yield chart in terms of cyclical low is moving upwards. So this is not a good sign. So what if, let's say now, if the US yield really has to go up? That means that they're going to price in non-rate cut. Then, of course, gold price will fall. Silver price will fall. Bitcoin price will fall. Can you get it? All clear? So we will watch this very closely, and I also update you along the way. But as long as you take the OP rule on our chart, it's fine, yeah? So all got it? All clear? If all clear, press number 1 right now. If not too sure on this, don't worry. I will create another video. Now, I mean, long time I last create a video on the MAO because I'm very busy over here in Vietnam. But I know that people have been asking me, they kind of missed my video. I will do some sharing very soon. Okay? All right, so that will be all for the overseas and fundamentals and stuff like that, okay? All right, so let's just go and do something that is more local, which is our market, okay? Okay, so let's look at today's goal, yeah? Today's goal is very important. Just give a minute. Messaging still coming in non-stop. Okay, now today, very important thing, very important information is that today we have a diamond, a 4 diamond at the closing. And this 4 diamond coincide with the KCL. So in short, the diamond line and the KCL line are the same. So 4137.25 is the diamond line, which is also the KCL. So very simple answer. If the market stays above this number, 4137.25, the market will go up. If the market stays below this number, the market will come down. It's as simple as that. So if you want to be buyer, all right, if you think that the market is going to go up, then you buy above 4137.25 and you target the nearest KCB, KTR, or pivot 1. Okay, that will be your target. Okay, I'll show you the 5-minute chart later, yeah? Now, if you think the market is going to go down instead, then you wait for it to come down below 4137, then you sell the market. And if you sell the market, you can target the MLP per se. So you look at MLP to the KCL, it's almost $34. And that's very lucrative. But with the KSI being green and KCX being black, then the market is favoring the upside than the downside. So you ask me overall, which one do I choose? Now, fundamentally, the market is more towards a sell because I don't think there will be a rate cut this month. But next month, sorry. But if you ask me for time being, as usual, the market need to capture people, right? And there's a KCB over here, right? I cannot believe that the market is going to go up today. Okay, I repeat, I cannot believe the market is going to go up today. Okay, so I already given you my personal take on this. Up to you. You make your own decision. My job is to make your life easier, not harder. Yeah. Okay. All right. So let me just share you the 5-minute chart and how do you can exploit on this. Yeah. Okay. So let's take a look here, everybody. Okay. So first of all, this morning was very choppy. The gold was very naughty. Initially, it sold down first. Then it hit the halfway mark, rebounded. That was where I know that this guy will do this because the KSI was green. Then after that, we went to buy and it went up. And you look carefully, it stopped exactly between the 2 levels, between the OP and the KTR plus 1. Totally doing that, yeah, squeezing both sides. Then after that, it basically went down again, which I sell again because this time the KSI is great. The only thing that's missing right now is the diamonds. The diamonds are not there at all. And that was where I get very edgy on this. I prefer to trade when the diamonds are around, not when they're not around, yeah? So because of that, I kind of realized that today I might be caught both sides. Then after that, the market goes down. I thought we are going to hit to KTR -1, stand by this. Then I noticed that I don't like the way the KSI is reducing. So around here, I booked some profit first at 4124. I think you saw my statement already. So I bought some, I just take some profit over here and I started watching it. Then I saw the two diamonds coming up. When I saw the two diamonds coming up, I know that the market wants to go up already. Because historically, I've proven that when the two diamonds are around, usually, not 100%, usually the market will go up. Okay, usually the market will go up. Okay, so because of that, and the KSI obviously is green, KCX is black. So what we need to do is that we need to draw the diamond. So initially the first diamond line was here. So I went in to buy here. That was pretty fast. I made some good money. And then after that, the price go higher, a new diamond pop up, now a new diamond here. The question you ask me is this, KL, which diamond should I use? Always use the closest one to you, which is here. So now I understand why now the gold is stuck around this area. For a minute, yeah. All right, is that the market now is basically stuck at this point right now. So we need the market to pierce through to go up. Now I cannot go live because the MT4, but I can roughly quote you the number, the price. I'll just use my handphone now. Okay, gold is going higher now. It's going up. Okay, so guys, have you bought gold? Gold is going up now. Okay, finally it's going up. So 4152 is the KTR plus 1. All right, you can think between 4151 or 4150, up to you, depending how you take this trade here. Okay, I'm going to take at 4151. Okay, put there 4151 to take my TP. Okay, all right, so 4151. Okay, if you think that the gold can go higher, as I said again, as earlier, right? If you think gold can go higher, we can put at a higher level, which is the pivot level. Okay, let's take a picture first. Okay, so the KCB, yeah, the whole one. By the way, the app KCB is missing because they're doing some overhaul. There's going to come that new app coming in. So recently the KCB is missing from the day chart, yeah, for the app side. Okay, not for the desktop is still okay. The app side has a bit of missing data. Okay, 4171. Okay, so guys, the KCB here is 4171. So if you want to buy gold and hold it all the way to KCB, which is very possible to get 4171. Okay. All right. So I give you a number, 4171. If you want to hold all the way, you can try holding that. Okay. This morning is a bit of the market been swinging quite a fair bit. And usually when the market swings such a dramatic way, that is because they know where the market could be going. So they purposely swing here, swing there, swing everywhere to just throw you off the course and then make you piss off. And then after that, they move the market. Okay, so it's how I see it. Yeah. All right, so that is gold for you. Then Dow Jones is very interesting. Now, Dow Jones today, we have a CCRY on the day chart, but the market is below OP. So you cannot execute the buy. Okay, not yet. All right, but interestingly, the KSI is red. So now my take is this. Today is a DJDD. Today, the OP is a king. Is below MA30. So you ask me what happened, right? I can tell you straight in your face. If the Dow Jones stay below OP, there is a very high chance we will see 46103 today. Why? Let me tell you the reason. Number one, below OP, right? Number two, doji directional day. Three, you notice that the KSI is red, KCX is blue, so the indicators are bearish. Four, it's trading below the MLP. This is not a good sign. And of course, if you look carefully, okay, there is a 4 diamond over here. If you draw the line extensively, you will see that actually that's why the market will have the downside pressure. So if the Dow Jones come down, then what will happen to the gold price? Now, there is two inversion. Gold may go up to 4171 and pull back from down there, not too sure. or maybe the gold just go up on its own as a form of hedge against the US market. Now, this one I let the market decide. But for me, it's that 46103 is a very high chance it will go. So from where we are right now, it's for 270 points there. You can take that. Now, what if it goes up, right? Of course, if it goes up, then very simple. The pivot 1 will be the target. So the pivot 1 is 46591. So from here to here, we have about 130 points. So if you think that the Dow will go up instead, then wait for OP to climb past it, breaks the MLP, breaks the OP rule, breaks the DJDD setup, and then you mount itself towards the pivot 1. So again, I repeat, if you ask me, I think the Dow Jones will go down, but of course, the market can prove me otherwise. Okay, so this one is very important. Yeah, we'll talk about gold, yesterday's gold quickly later on. Yeah. Okay, Bitcoin. Now, Bitcoin, very interesting. We have a 4-day rally in a way with the boys buying relentlessly. But this morning, right, it's a DJDD also. So by right should be a strong upside. But the market, the moment it opens, it go down already. So, and now it's below the MLP, not a good sign. Now, with all the thing all calling for buy and it doesn't go up, right, this is not a good sign, yeah? So I believe that Bitcoin will come down to 85,587. It's about 2,000 points away from where we are right now. I think it will happen. All right, why I feel that way? Because I think that Michael Sayers is really, really over leveraged. And a lot of people also doing the same thing. So I believe that, you know, if I'm big boy, I would rather go for a kill. I'd rather let the market go down and something like that. Yeah. Because you can see now it's against the traffic. MA30 and MA200 are all actually on top of us. So that means the market is really very bearish at the moment. Okay. All right. It's my personal take on this Bitcoin. I want Bitcoin to come down to 79,000 if it's possible. Then you can buy cheap over here. Okay. All right, so we have all the things. Let's just go to the gold for a while. Quick one on the gold, yesterday's gold. Yeah, just hang on with me for a while. I'll show you something very interesting, and I think that you will like it. Yeah, just give me a minute. Okay, so this is the gold chart of yesterday. Yeah, just a quick review on gold chart. Now, yesterday gold chart we have is the DJDD, and I told you guys that gold may go down to here, right, to 4005. I said that yesterday. I'm not gonna like lie over it because I told you, right, the fundamental is against gold, yeah, but the technical itself proved me wrong. The market stays above 4P, above MLP. It was a buy at the start already. And the KSI and the KCX were all bullish. So that is where I said that the downside will not be close at the day low. It will rebound. But I never expected that it will go up so much. So when the market goes above OP, above MLP, above pivot 1, so by right, the default is the upside. And because the DJDD closing should be near the high, in this case, it really closed near the high. So that's why I felt that, right, I need to go through with you to let you understand this better. So you look at the gold really at the start of the day, it really comes down. But you take notice of the stack diamond over here. Now in my sharing, as I told for stack diamond, when it appears, you should take it very seriously. Yeah. And you can see after that, it did stop at the pivot as expected. But the only thing is this, there's a long, what they call sideway at the pivot. And then after that, when you notice that the market goes into a decline mode, and then after that, the market pumped through the pivot, that was where it went crazy all the way and closed near the high. So this movement came very late, all right? I think about 10, 11 p.m. And I was really resting already. I'm very tired yesterday. So missed the whole run, very wasted, yeah? And although I did sell the first wave, but I did not buy up the second wave. So that's why I want to share this with you. So the DJDD really has its impact, and if you follow through, you will make money. Now, this blue arrow is there because it's the first time it crosses the pivot with a closing above it. That's why the blue arrow pop up just to inform you that's a pivot crossover. Okay, so that is what happened to the gold price, and of course, gold went all the way up and stuff like that. So plus today's analysis itself, I think that 4171, if you want to hold your gold to there, you can try. Okay, you take progressive profit along the way. You don't need to all in and get all out. All right, guys, that will be all for today. I wish you all the best. I still say it again, gold should be going up today as long as it stays above 4P. Okay, guys, thank you very much for today. Thank you for waiting for me. Take care and have a good day. Bye-bye.